Hi, hello, welcome friends. Welcome at our MUKTOMON talks. Our topic today is on economic inequality. This is the first presentation in the series. The question that all of you may ask, what exactly we understand when we say the term economic inequality? Well, that's the basic question in all our minds, and we thought we should try to understand. We, of course, should understand it by the facts, as it is by the facts, as the society's current status is, and of course, with the data, real and actual data. As you see in the diagram here on the right, the blue and the red and the blue, two pyramids you see, right? And their bottoms and peak placed opposite to each other. What it means? Simple. A large part of the population doesn't possess the wealth of the country. And see the contrast. A small, a very small part of the society has all the wealth or most part of it. Say Indian people, for example. This huge Indian population, they are having a very small share of the country's wealth. So a huge rich and poor divide, right? In the distribution of country's wealth. That's it. It's not at all an equal distribution. Not at all. It's a very imperfect, a very sense of unequal distribution of wealth. A huge inequality comes in your sight, right? So inequality of countries' wealth we're talking about. Now inequality is not only in the fair share of a country's wealth. We all familiar with the fact that people's income, the income figures, are always highly skewed, very high, and we see extreme low level of income. We'll see all the data in our subsequent presentations. However, when you're trying to understand inequality, we clearly have no deny that a titanic, a gigantic difference exists in people's income in our population pyramid. So you see in this slide some stats given. This data is based on the some current Oxfam report that was again based on the World Wealth Data Book, which was published by Credit Suisse. And you know what is Credit Suisse, right? It's an organization in the field of banking. They are in fact a very big name in banking, and they are a Swiss multinational investment bank. They are working in financial services, and they're based at Switzerland in Zurich. They advise clients in all aspects of finance across the globe 24/7 around the clock. So this Swiss bank, Credit Suisse, is actually intended for companies and wealthy individuals. So it's a member of a very premier group from the Wall Street, a list within the list of 9 largest and most profitable banks in the world. So what you are hearing now, so this Credit Suisse Bank, they are into the wealth management, they are into the real estate planning, insurance, tax planning, they are in the investment products designed for the rich and very affluent peoples, and they are also in the portfolio managers and all that. So, so when you hear it from the Credit Suisse, you are actually hearing it from a source which is not that inclined to say what we are going to talk here. So this data is coming from Credit Suisse. So in this slide, as you see, we're talking about these inequalities in our society. inequalities in income and inequality in our wealth. And the fact is that only 10% of super rich of India holds more than 77% of India's wealth. And one and only 1% of super rich of India, they hold more than 50%, more than 51% of India's wealth. And what about the income? The additional wealth that is created in India per year. If you talk about 2017, 73% of that went merely to 1% super rich of India. And just a year back, in 2016, it was only 58%. So 15% increase have happened in just a matter of 1 year in the income going into the super rich hands. So from this data, it is very clear that inequality is increasing and increasing at a very wild pace in India. So inequality is fast multiplying in India. What's wrong then? Do we need a relook at the economic policies? See, it's a global trend across most of the world at different scale across the continents. Rich and poor mega divide increasing at very alarming rate across the globe and in our country also. So this massive rise in inequality ultimately to threaten all further developments. India also aggressively trying economic development and which is highly favorable to the super rich of India. And Indian government is extending all facilities so that the super rich of India can multiply at fast pace. Now, when you talk about the current economic development, what's the current economic development model? You might have heard the words like industrialists, especially top ones, look for liberal policies. Well, last 2.5 decades or more, a little more, post early 80s, we heard these words, new policies, liberal policies, and so on. We're hearing about absolute decontrol more and more. Withdraw controls on trade, withdraw control on capital investments. Capital or money or wealth, even coming from across the borders, state government should see it liberally, should be liberal about flow of capital, wherever it can go or wherever it can come from. Now this capital, extra money, piled up in the domestic as well as across the borders. They want to capture the field of education, health, insurance, infrastructure, all sorts of natural resources, in fact, even including air, water, environment. Let them put their capital in all possible places. All the interest is, you see, multiply their capital. Now, what it's resulting into? Resulting into huge and enormous accumulation of capital or wealth in very fewer hands, helping the super rich. Now, when you say this is being proved, being shown by the data, as we'll see here. These new policies, liberal, favorable to capital owner. They are favorable to super wealth owners, whether that's doing really great for the economy or for further advance of the society or even to propel the economic developments or taking them at greater heights. We perhaps need to see, debate, and we need to ask. Now, many economists, they will talk in favor or against the policies or for the needed corrections on the policies. But here, at this moment, let's just highlight the data that it reveals, accept the data Let all of us know about it, educate them about it, and take part in the discussions. In this small talk here itself, we cannot go in the length and breadth of this discussion and listen all the favoring points or be the counterpoints. So what we're focusing at the moment here in our talk is to be aware of this fact. We invite you to be aware of this fact. The new policies, these new policies, so-called liberal policies for last 25 plus years, which resulted in what? And and the data, the big enormous inequality, which we already shown even in India in our earlier side. And this data is coming from the horse's mouth. Now, on this page, what we talk about, again, we're not getting into the larger debate of, or the whole point of this talk is making all of you involved in the debate. We here merely just to say, see, out of the new liberal policies, what's the trend in economy? And what's the fact coming in front of our eyes? We see high income inequality, a huge difference in income levels, and it fires up increase of the wealth inequality. This coming from data again, more income inequality means what? Means surplus in the hands of the rich, the super rich, the accumulating and the wealth multiplying, concentrating more on this in our later presentations. Then you see the essential support systems like education, health, etc. opens up to the private. So this drives up the poor due to the increase of the value of the support systems. So as we already said, money surplus in few hands. They need more profits. And they cut into the sectors like education, health, and so on. Means, so these are going in the private, and those prices, those costs are going up. So common people's more engaged in even getting those, and so the surplus in their hands are reducing. So in terms of access, so the access getting restricted for the common people not able to even think about beyond these essentials. This is like a spiraling effect on them, so pushing them down further. Of course, there is a rise of a middle class, a very small part of the population we saw rose up and came up at income levels, but that doesn't mean the percentage wealth accumulation has decreased or going down even a bit because of a more distribution to some more new generation of so-called middle class. So only a few of the rising middle class often supporting the new regime of economic developments. But how many of them really trying inside deep where they're heading to? Again, big private industries. The trend clearly shows big private industries, they capture small ones. They capture agricultural properties, distribution systems. They default in payments of loans to government banks. This way does the eating out public money and wealth. So this is a common sight. So big ones eating out small ones. So there are some new entries in the entrepreneurship. So they sometimes they make profits, like in the IT sector, the technology, the new technology areas, and all that. We have seen the quick meteoric rise of few entrepreneurs, but quickly they made out some capital out of it, but quickly they are also exiting from the market and selling out for more money. So, and we see that those fundamental, those old core sectors, those old-fashioned industries, they are selling out, and because they are not able to make sufficient profits in this kind of competition. So even many of them, you might have seen, selling their lands, uh, their farm properties in favor of real estate's growth, shopping malls, educational institutes, educational ventures, selling educations, private educations, and the core sectors we see. uh, drying out. You heard about non-performing assets. It's nothing but the loans which are not paid. So who not paying actually those loans? So why? Now, if you talk about yourself, the common people, can they escape not paying loans to the government banks? We, in fact, even seen suicides amongst the poor people and so on when they are in default of paying for the loans. But look at the biggies, look at the mega industrialists and all that. Their loans dues are waived, exempted. How? Who exempts it? The government comes forward to exempt it, and at what cost? And using whose money? It's public money. It's your money. And all of you know, the government reduces tax payables in favor of the super rich, and government calls for tax reforms, tax measures, tax cuts for the biggies. This is a common agenda, and in the name of liberal economic policies. The last point, which we highlighting here, something called artificial increase of the wealth. How it happens? You see, through subsidizing. See, basically, during crashes in stock markets, or the government encouraging them to do even artificial business on the derivative sectors and the commodities, and then they play derivative speculations even on natural resources, which should never go in their domain. And government creates, in fact, support funds whenever there is some crisis, and then their artificial wealth accumulation tries to go down. Many times we're seeing that wealth rise suddenly, right? There is no real business transaction behind. For example, when the stock price boom happens, suppose that 2,000 crore uh, of asset suddenly becomes in very less time 2,500 crores. So in a very small span of time, it's an increase of 25% on the assets values. So can go up even higher, in fact. So all are happy, everybody happy, the government is happy. Our middle class, so-called middle class, who support this regime, sometimes we also see a lot of vibes from them supporting that the stock market is booming, and they are also maybe getting a very 0.01% or some percentage of share. But whose health increasing how? So this production, real growth, nothing happened. So then, so when you take their balance sheet, suddenly you see the super rich families' wealth has shot up because of the stock market boom. So is it a real rise? No. Has it happened through some real economic means, economic production? No. So just through stock market, some rapid manipulation, some few transactions. So now think about, so their assets, their wealth increased artificially, suddenly. But now think about the scenario, then our market prices start crashing suddenly, and it's inevitable, right? When it goes up sometime down the line, it has to go down. So it can actually totally crash also. So all these artificial wealth which they create to split stock market transactions are actually, yeah, that can finally crash out. But you see that whenever stock markets are falling and all that, the government comes out with different measures, comes out to help them, so the stock market prices does not fall below a certain level. So who is funding so that the prices do not fall too much? It is our government which is funding, through which treasury they run. My money and your money, right? Common people's money. So that treasury, out of that, then they take some measures. So that tries to check the falling down of stock market prices. So once the artificial assets that have gone up in the stock market, so these artificial assets, when see it tries to crash out, bubble out, so that time the government is funding it, government is subsidizing so that this artificial wealth created can stay for longer. Now, as we told before, our idea is again to get you involved in the discussion, get you involved in the understanding about these new policies, new liberal policies, understand and take a stand. So, as you already discussed, the new economic policies, the way growth is happening now, we see the main purpose of the new policies where it's creating the advantage and on what it's actually resting. So, you see some trends very clearly. So the idea is that allow private capital to flow everywhere without any control or restrictions, and then advocate for a market solely driven by the free ride of private capital across the borders. So globalization of private capital. Private capital has to rule the world. Now it wants to ensure that no state control, no government control or restrictions come in the movement of private capital. It's absolutely free trade, free commerce. Deploy the accumulated capital wherever it has accumulated across the world and reap profit. So essentially, we're seeing that these new economic policies are more of capital globalization. So it means uh, focus, its main focus that allow capital surplus money to win all over the world and all the markets possible. Now, these new economic policies they never advocate to go for traditional deficit financing for domestic money supply or creation of market demand. Instead, what we see that it always advocates, you might have seen in the current government policies, that it always advocates foreign investments, using foreign investments to expand the economic growth and increase your exports. So previously, we saw countries investments more coming in the form of traditional deficit financing, so printing money. But now, why not allow foreign surplus money to come here, invest and make the profit? Why the state would review this at all? And why the state would interfere in the economy? Why the state to interfere in the capital flows? So allow money, even if that comes from abroad sources. Purpose is to create wealth. Why should you object if my family's wealth is seen as growing out of borrowed money from elsewhere? Who will think on the borrower side? Final wealth in the form of profit out of the money going where? So who has to see that? So, so due to this only and highly focused profit model, it it drives away the large common people base from the economic growth story. Common people they lag behind the tools and technologies, modern tools and technologies which are adopted by the capital investors for quick profits. So the common people they cannot cope with the modernization techniques. Very soon they find them unemployable. They become less productive. They cannot adjust with the new paradigm shifts in the context of modern business productivity. So they are driven out of their current occupations in agriculture, rural, urban sectors. They are out of pictures. Now only very few who can adjust and cope with, as we already discussed, they give rise to a section of very limited privileged middle class. And unfortunately, they start supporting the modernized this type of capital investments and business profit models, and they become sometimes advocating a lot in favor of this new liberal economic policies and that we have already discussed. So we have some idea on the current economic growth model in India and many countries around the globe. Call it the new economic policies, new liberal policies. We clearly see the trends which are clearly visible and we discussed about it. Now, in the context of India, we see all these trends are very much visible, and India is fast rising towards an economy where wealth getting into the hands of the 1% super rich class. And these are coming from the actual data points, actual data with world level acceptable data. We'll show in our later presentations. Our emphasis here is that we want all of you to be aware of this. So to conclude it here, in India, in our country as well, it has become one of the worst victims of huge income inequality and even more worse, wealth inequality. And the question is, should we stay mere spectators? Or should we try understand and ask questions? Thank you for listening. So do join in our seminars, connect to us. You can also write to us at muktomon.india at gmail.com. You can send us your thoughts. So in our next talk, next presentation, we'll connect you with some search at the root of this economic inequality and ways of exploring the huge inequality. We'll discuss on some postulates, some theories, some ideas, thoughts of some great economists to find and explain it out and even to measure it or how to measure it. And I hope to see all of you there in the next presentation. Thank you very